Okay, so let's have a look at the third adjustment for the 2020 exam paper, Sole Trader as Heighway. So this is your depreciation adjustment. So provide for depreciation on delivery vans at an annual rate of 20% per annum on cost from the date of purchase to the date of sale. So note, on the 31st of the 3rd, 2019, a delivery van which cost $48,000 on the 31st of 10th, 2016 was traded in against a new van costing $64,000. So we need to reduce our delivery vans by $46,000. We're going to increase it by $64,000, and we're going to get a new figure for our vans to go on the balance sheet. Allowance of 26 was given on the old van, so it's going to help us calculate to see if we made a profit or loss on the sale of the van. The check for the net amount for this transaction was entered in the bank account, but was incorrectly treated as a purchase of trading stocks. We need to reduce our purchases. So with a question like this, there's 5 steps that you need to do. They are as follows. So the vehicles account, we've defined the value of the vehicles by decreasing the vehicles sold and increasing the vehicle bought. We're going to calculate the depreciation that goes into your profit and loss account. So find the value of the depreciation for this year. The balance figure then in your cumulative depreciation will be the figure that goes into your balance sheet. Your disposal then, find if you made a profit or loss on the sale of the vehicle, and then adjust your purchases. So the check amount, we need to reduce our purchase by the check amount that we paid for the new van. So you're going to open up your 3 accounts, your vehicles, accumulated depreciation, disposal. Find your balancing figure for your vehicles and your balancing figure for your accumulated depreciation. So let's go and have a look at what is the value of our vehicles. It's going to be taken straight from the question. So your vehicles or your delivery van costs us $250,000. It's going to be our opening balance. Then our accumulated depreciation then, once again from the question. So our delivery van's $250. They're now worth $186. So the difference between those two will give us our accumulated depreciation. So 250,000 minus 186. So that's our opening balance for accumulated depreciation. Now we'll go and fill in our vehicles with the disposal. That's the amount that of the vehicle that we just sold. So that's taken from the question. So that's going to be the 48,000. So we need to reduce it by 48,000. Then the bank, then we just bought a vehicle. So how much was the vehicle that we bought? 64,000. So we're going to increase our vehicles by 64. So remember, vehicles is an asset. Increase in asset goes on the debit side. Decrease in asset goes on the credit side. So we can now tot these up and get the balance that's going to go into our balance sheet. So it's the difference between the 314,000 and the 48,000. Just going to check to make sure that they balance. So they do. So we know that our balance figure to go into our balance sheet as a tangible asset is 266,000. So remember, the balance for your vehicles, the 250,000, is taken from the question or from the trial balance. Your disposal of 48,000 is the vehicle that we sold. So we need to reduce our vehicles by 48,000. We bought a new one for 64,000. So we need to increase our vehicles by 64,000. The balance then, the difference between the debit and the credit side, is 266,000, and that figure then is going to go into your balance sheet and your tangible assets. So that's the first part done. So number 1, your vehicles. Second part then, so we need to find out a couple of things. We need to find out what is the profit and loss depreciation, and then what's the depreciation of the asset that we just sold. Just remember the double entry for our vehicles. So we're going to credit our vehicles account, but we're going to debit our disposal account to help us figure out, do we make a profit or loss. So that's number 2, depreciation of vehicles. Find out the value of depreciation for this year. So let's have a look and see what is the depreciation for this year. So there's 3 figures. So the value of our assets, or the value of our vehicles that we have, is 202,000. That 202,000 is the balance brought forward, which is 250,000. Take away 48,000. That will give you the value of the vehicles that we have in our yard. Then we got rid of a vehicle, which is 48,000, and we bought a new vehicle, which is 64,000. Alright, so we need to find out what is the depreciation for each of these three vehicles that we have and add them up, and that's going to give us the depreciation expense that's going to go into our profit and loss account. So let's have a look at the rate of depreciation. So it's going to be 20%. So it is 202,000 multiplied by 20%. We're going to have all those vehicles for a full year. So there's no change in those vehicles. Our 48,000 is going to be multiplied by 20% as well. And our 64,000 is going to be multiplied by 20% as well. But we didn't have these vehicles for a full year. So let's have a look and see how long we had them for. So on the 31st of the 3rd, 2019, a delivery van which had cost 48,000. So we had this vehicle worth 48,000. We had it for 3 months. And then the 64,000, then we had it for 9 months. So we're going to multiply that by 3/9. And then we're going to multiply that by, 3/12. Multiply by 3/12 for the year. And then multiply by 9/12. So 48,000 multiplied by 20%, multiplied by 3 months divided by 12, and that will give you depreciation for the year. And then for the 64,000, same again, we're going to multiply 64,000 by 20%, multiply that by 9, and then divide it by 12. And we're going to add those three up, and that's going to give us the figure for our profit and loss account. The expense, 52,400. So our expense, 52,400, and that then is going to go into our profit and loss as an expense underneath selling and distribution, because we're doing it for our vehicles and for our vans. So remember, this year's depreciation to 220,000 is the 250,000, take away the 48,000, that's multiplied by 20%. We got a 48,000 that we sold, we only had that for 3 months, so it's multiplied by 20%, multiplied by 3/12. And then 64,000, the vehicle, multiplied by 20%, we had that for 9/12, so we're going to multiply that by 9/12. Then we also need to find out the van that we just sold. So remember, we need to get the disposal of this 64,000 the balance that we have brought forward. Some of that includes the van that we just sold. So we need to find out how much of this 64,000 is for this van that we sold. So we need to do a little calculation. So we need to find out how long we had the van for. So we purchased it on the 31st of the 12th, 2016, 31st of the 10th, 2016, up until the 31st of the 12th, 2016. So we had that for 11/12. So we had it for 2 months. And then we got the 1st of the 1st, 2017, the 31st of the 12th, 2017. That's for a year. The 1st of the 1st, 2018 to the 31st of the 12th, 2018. That's for another year. And then I think we sold it on the 31st of the 3rd, 2019. So you got the 1st of the 1st, 2019, the 31st of the 3rd, 2019. So that's going to be for 3 months. So we're going to add these up, and that's going to tell us how long we had that vehicle for. So we had it for 29 months. So we're going to take the 48,000, which is the value of the vehicle. We're going to multiply that by 20%, and then we're going to multiply that by 29/12. So the total depreciation on that van that we just sold, 48,000 multiplied by 20%, multiplied by 29 divided by 12, is 23,200. So we need to reduce our accumulated depreciation by 23,200. So we're going to debit our accumulated depreciation, and we're going to credit our disposal of 22,300. And now we can balance off our accumulated depreciation account to find out what is the balance that we're going to bring forward to the balance sheet. And once again, it's going to be the difference between the credit and the debit side. So our balance is 93,200. So we're just going to check. Two sides balance off. So we get 93,200. And that's the figure then that's going to go into the balance sheet in your tangible asset. And then this 52,400, that's going to go into your profit and loss account as your expense. And then the last part then, we want to see if we made a profit or loss. So we got our double entry already. So we got our 48,000 from our vehicles account, and we got our 23,200 from our accumulated depreciation account. The allowance then in the question was 26,000. So we got 26,000 for these for the vehicle. So the vehicle was worth 48,000. That's the value of it. In theory, what we got for it was 49,200. So we made a profit then of 1,200. So remember, if the balancing figure is on the debit side, it's a profit. If the balancing figure is on the credit side, it's a loss. So that 1,200 is going to go into your profit and loss account in your add operating income or add it to your operating profit. And then the last, and then we need to adjust your purchases. So we're going to find the amount for your purchases from the question. So 1,080,000, that's your purchases there. 1,080,000 on the debit side. Then I'm going to take away the check. So the value of the vehicle that we bought, I think, was 64,000. So 64,000, we got allowance of 26. So the difference between those two is how much we paid for it. So we need to reduce it by 38,000. So the check that we wrote was for 38,000 because the value was 64. We got allowance of 26, so the check's 38. So our new purchase figure then, that's how we've calculated. And if there's no more adjustments, that's the figure then that's going to go into your trading account in your profit and loss. So that's how you do the adjustment for your vehicles for the 2020 Heighway. Adjustment 3.